Hi, welcome to our channel of Ignouaudiobooks, Indira Gandhi National Open University, School of Continuing Education, Certificate Programs, Certificate in Nutrition and Childcare, CNCC, CNCC-1, Nutrition for the Community. Block 7, Quantity Cooking, Unit 28 Review of Food Service Establishment. 28.1, Introduction. In the last two units, you have learned how Lakshmi planned and established the food service establishment with an objective of providing packed lunches to office employees and earning a profit. Can Lakshmi now state that her establishment is running successfully? It would be successful only if she is earning enough money to cover up all her expenses, repay back the bank loans and yet give her some profit. Any operation can be said to be successful only when a review of its performance shows that it has functioned according to plans and achieved its objectives. Such a review is essential and provides an opportunity to periodically check the progress of the establishment. Let us now see how Lakshmi reviewed the progress of her establishment. In Unit 26 you had learnt that Lakshmi had prepared a plan in which she set herself certain objectives and prepared a budget which served as the standard. In Unit 27, you learnt how she put the plan into action. In this unit, you will learn how she checked the actual performance. This checking was made possible because every time the plan was put into action, the performance was documented in certain records. Lakshmi analyzed the income, sales, and expenditure using the information available in the records and checked them against the standard i.e. the budget. She finally prepared a profit and loss statement and ensured whether she was getting the estimated profit or not. The following flowchart explains the process of review. Look at the screen for table content. In this unit you will find a detailed discussion on various kinds of records maintained by Lakshmi as well as her method of sales and expenditure analysis. Objectives. After going through the unit, you will be able to times identify the records that have to be kept in a food service establishment. Times analyze food cost and sales of a food service establishment. Times prepare a profit and loss statement based on the analysis. Times discuss the check control measures which help in keeping the expenditure within limits and times suggest the corrective measures if needed. 28.2 Maintaining records. You have just read Let Record of Sales and Expenditure form an effective tool for reviewing the progress of a food service establishment. In order to get a clear picture of expenditure and sales, Lakshmi had documents of all the transactions she made. She recorded every action in detail so that later on she could look back and pinpoint any discrepancy. Let us now read about the records maintained by Lakshmi at each stage of operation i.e. purchasing, receiving, storing, issuing, producing food, selling. Let us start with the first stage of operation i.e. purchasing. Purchasing, Lakshmi maintained a suppliers directory, which indicated a list of suppliers from whom she had planned to buy the commodities. The list included their names, addresses, telephone numbers and the terms agreed upon. Such a list helped anybody to locate the supplier and place the order when Lakshmi was not available. The other record of purchase was the purchase order. This is a list of items that are to be purchased with their specifications and the agreed price. You have already read, in Unit 27, specifications are very important in purchasing any product, especially foods. Specifications, as you know, is the description of a particular commodity in terms of its size, quality or condition. It is essential that the purchase order gives clear-cut direction to the supplier about the items to be supplied. Lakshmi sent the purchase order for each item irrespective of the quantity purchased. Each purchase order was duly signed by her. A sample purchase order from Lakshmi Devi, name of the receiver, Ref. No. X12, if any, to MS Mod Bread. Suppliers, name of the supplier. Date 5th August 1991. Address Lakshmi Food Suppliers, 21, Mayapuri, Delhi. Please supply the following items by 6th August 1991, date. Look at the screen for table content. Receiving, it is important to make a record of commodities received. At the time of receiving, the items brought to her premises were physically checked with the purchase order. Then the invoice cash memo was checked with the order and the commodities. An invoice or cash memo is supplied by the supplier along with the supplies. It is the list of items supplied with their prices. Lakshmi had to be careful at this stage of purchase as she had to ensure that the supplies were as per the purchase order in quality and quantity and that the invoice's cash memo was only for the items actually supplied. Comprehensive report of items received was submitted to Lakshmi by the receiver. Storing, in the store, Lakshmi had a good system of records. Here every purchased item that was brought to the store was noted down in a stock register and one page was allotted to each item. In this register on the left-hand side, she noted down the incoming items, date of receipt, its value, quantity, source of purchase from the invoice, cash memos or from the receiving report. The right-hand side of the page indicated the amount of the item that were issued out. The balance of the items available in the store was also indicated in the register. A record of the perishable items bought and consumed daily was also maintained in a similar manner. Sample of a page from stockbook. Look at the screen for table content. Issuing, the ingredients were issued under supervision of the store in charge. The things were not issued until and unless a requisition slip or indent was produced. A requisition slip is an order form submitted by the user to the store in charge. It was prepared daily, depending on quantities of each item that would be required to make the menu items. Requisition slip must be signed by a person authorized to do so. In the case of Lakshmi, it was signed either by Lakshmi herself or by the cook. An example of the requisition slip used by Lakshmi. Look at the screen for table content. Lakshmi made it a point that store in card enters the quantities issued from the store daily in the tag register. Producing food, as you known, food production involves the preparation of the items of menu with the foodstuffs that are issued from the store. Can any record be maintained even at this stage of operation of the food service establishment? Yes, Lakshmi maintained 3 kinds of records at this stage of operation of her establishment. Let you read on to find out how they were prepared. She maintained a menu book. As you know, the menu for packed lunch cannot be same every day. You have learnt Lakshmi had prepared cycle menus. Changes were brought in these cycle menus due to seasonal variation, price variation, availability, customer preference, etc. So daily there was some kind of variation in the menu. In menu book, Lakshmi kept a record of each day's menu and standardized recipes for each item of the menu. She determined the number of portions of each menu item prepared daily. Finally, each menu item prepared was costed on the basis of the cost of ingredients used. As you will read through the unit, you will realize that it is an essential record because sales money will be accounted to the number of packets produced and sold. Sales record. So far you have read that Lakshmi has kept a record of each and every transaction she made for preparing the food packets to be finally sold to her customers. However, she needs to keep track of sales or sales income also in order to get an idea of her income or profit. Lakshmi was very particular in maintaining the record of her sales. Aren't you interested in knowing the types of record Lakshmi maintained for keeping a check on her sales income? Let us read about them. Customer register. Lakshmi noted down the names of all her regular customers in a register, similar to a school attendance register. The supply of number of food packets was indicated in the database columns on the right-hand side of the register. This register enabled her to accurately calculate the number of food packets supplied and the amount due from each customer. Consumption sheet. This sheet kept database record of her sales. A consumption sheet for a day indicated date, number of food packets prepared, number of food packets sold to regular customers. This information was obtained from the customer's register, and the number of food packets sold to casual customers. This information was obtained from the delivery boys, cost per packet, and finally the total sales. A sample of consumption sheet for a month. Look at the screen for table content. This information was tabulated month-wise to enable her to know the number of packets sold and sales revenue each month, and finally she prepared a table to give an idea about the annual sales. A sample of annual sales record. Look at the screen for table content. Other than the records pertaining to food, she also kept certain other records. These include labor cost and overhead and maintenance records. Let us learn about these. Labor cost. It is essential to calculate the total cost of labor along with the food cost. Lakshmi maintained a personal record of each of her employees. It showed the wages paid to them, benefits given like bonus, any advance given and other facilities extended. She also maintained a record of leave taken by each of the employees. This record helped Lakshmi to calculate the labor cost, overheads and maintenance. As for food and labor cost, Lakshmi kept record for overheads like electricity, gas, water, packaging, repairs and other items. She preserved the receipt of bills she paid for electricity, gas, water, etc. every month. Check your progress exercise. 1. Asha and Lata are running a small-scale business of supplying lunch snacks for small parties like birthday parties and kitty parties, etc. They want to place an order for 10 kg potatoes at the rate of Rs. 5 per kg and 6 kilograms onions at the rate of Rs. 3.50 per kg to Ms. own vegetable suppliers. Prepare a purchase order for them. 2. Asha and Lata in course of functioning observed that their food store gets finished much earlier than the expected date. Where do you think the fault lies in the entire operation of their food service establishment? How can they rectify this discrepancy? So far you have learned about the various kinds of records maintained by Lakshmi. Lakshmi used these records for reviewing the performance of her establishment. She wanted to ascertain whether the establishment was bringing her profit or loss. Lakshmi found that a large number of cash transactions were taking place. She did not know which of the records she should refer to. Her husband then came to her assistance. He explained to her the importance of bookkeeping and accounting in maintaining proper accounts. He informed her that all the information pertaining to cash transactions available in the records have to be transferred to the books of account, cash book and ledger. The transactions are first noted dateways in the cash book and then posted in the ledger. Initially, Lakshmi was helped by her husband in maintaining the account books. After some time she was able to take independent charge of her account books. Given below is the brief description of the account books maintained by Lakshmi. Cash books. Lakshmi learnt from her husband that all cash transactions, both incoming and outgoing, should be noted in a register called cash book. She recorded daily cash transactions in cash book. Cash book kept daily record of incoming and outgoing cash transactions. The incoming cash transactions or receipts were recorded on left-hand side of the register, and all expenses it incurred on payments were recorded on right-hand side. Lakshmi knew that number of transactions were taking place in her establishment, so she maintained up-to-date record of all cash transactions. A sample of a page of cash book is given below. Look at the screen for table content. Ledger. The entries from cash book were transferred to another register called ledger. In this ledger, a page was allotted to each item of income and expenditure. All transactions pertaining to a particular item were entered on the page allotted to it. A sample of a page of ledger maintained by Lakshmi is given below. Item: cooking gas. Look at the screen for table content. This system of accounting helped Lakshmi to assess the expenses incurred on any particular item at any point in time. Recap. 6. Summarize the type of information one can get from each of the above mentioned records. You are listening to this audiobook on Audio Learn IGNOU. Recap. 6. A brief overview of various records which can be maintained in a small food service establishment is given below. Suppliers directory. List of suppliers with their names, addresses, telephone numbers and terms agreed. Purchase order. List of the items that are to be purchased with their specifications and agreed price. Invoice cash memo, the list of items with the prices. This is given by the supplier along with his supplies. Stock register, it is a register in which record of each item is maintained indicating its value, quantity, source of purchase, amount available in store, amount issued, etc. Requisition slip or indent. A requisition slip is order form given to the store in charge by the person who wants to get issued anything from the store. Menu book. Menu book maintains record of a day's menu, standardized recipe for each item of menu and the number of servings produced in a day. Food cost record. Record of cost of each menu item and hence the total number of servings produced in a day. Sales record. A sales record indicates sales income on a monthly or yearly basis. Labor cost record. Record of expenditure on labor in terms of their wages and other facilities extended. Overhead and maintenance. A record of money spent on these like gas, electricity, etc. 28.3. Reviewing the actual performance. Before learning about the actual performance of Lakshmi's establishment, let us get an overview of the whole situation. Lakshmi, you learned, started her establishment with an investment of Rs. 40,000. She had the objective of generating a monthly profit of Rs. 2,250, which is Rs. 27,000 a year. Out of this profit, she had to pay Rs. 723 a month as installment on the loan she had taken from the bank. She also had to repay the loan she had taken from her brother. She estimated to spend money on following categories of items. The table is being repeated from Unit 26 for your benefit. Table 28.1, Estimated expenditure on various heads. Look at the screen for table content. Let us now see if Lakshmi could find out whether she was earning the desired estimated profit or not. She reviewed the performance of her establishment both monthly and annually. Read on to find out how she analyzed her sales and expenditure and prepared a profit and loss statement for reviewing her performance. 28 March 2001, Sales Analysis. Look at the sales record of Lakshmi's establishment, Table 28.2, for the first year. We will review the situation in the first 3 months and then at the end of 1 year. TT is important to review the situation every month in the initial stages to ensure that the operations are going according to the plan. Review of food service establishment. Table 28.2, Sales record of Lakshmi's establishment. As you can see from the table, Lakshmi was able to get an order from 25 customers in the first month. The sales record at the end of the month revealed that out of the 25 customers, 20 took food packets for 25 days, and 5 for 22 days only. The delivery boys were able to sell about 2,012 packets against cash payment to casual customers. This sales income was Rs. 3,660 from regular customer and Rs. 72 from packets sold to casual customers. Times. Now let us see what was estimated income in first month. See table 28.1. The estimated income was Rs. 3,750. Here you may observe that Lakshmi was not able to obtain the estimated sales income, because though her market survey indicated that 25 will buy her lunch, only 20 took regular lunch and some of them did not take regularly for 25 days. The next month there was an increase in her clientele due to the popularity of the packet meals and 60 customers opted to eat her lunch packets regularly. Review in the end of the month revealed that out these 60 customers, 54 of them bought the packets for the 25 days, 2 for 23 days and 4 of them for 20 days. The delivery boys were able to sell 25 packets on cash payment. In this month Lakshmi had a sales income of Rs. 9,006. Rs. 6 more than the estimated sales money. See table 28.1. Here you may observe that Lakshmi was able to get the estimated sales money by selling additional lunch packets to casual customers to compensate for the reduced sales to regular customers due to some of them remaining on leave. In the third month, Lakshmi had 100 customers who took her lunch packets on a regular basis, with one or two of them remaining on leave a day. About 80 packets were sold to casual customers against cash payment. The total number of packets sold to regular customers in this month came to 2,450 in number, and 80 packets were sold against cash payment. The sales income from the regular customers was Rs. 14,700 and Rs. 480 from the casual customers, making a total of Rs. 15,180 in the third month. Here Lakshmi was able to get more than the estimated amount of sales income because its shortfall in the sales, which would have occurred due to some of the regular customers remaining only for a few days, was compensated by sales to the casual customers, and furthermore it also helped to add to the estimated sales income. When Lakshmi reviewed her sales performance for the year, she agreed that she had started the establishment with 25 customers, which steadily increased to 60 in the second month and to 100 in the third month. Thereafter, the fall in number of customers in the summer months was due to more employees proceeding on leave in these months, and the increase in customers in the winter months was because of the employees preferring the hot lunch to the cold lunch packets brought from home. From this trend, Lakshmi could predict the variation in the number of customers added next year. The shortfall in the sales money in the summer months was compensated by the increased sales during the winter months. Her objective was to provide 100 lunch packets each day and to get a sales income of Rs. 15,000 per month, or Rs. 1,80,000 in a year. However, her sales income in first year was Rs. 1,66,830 only. This was due to fewer sales in first 3 months. The average number of packets sold to regular customers per day came to 94 when the 12 months average was taken. However, it came to 104 when the average from third month onwards was taken. It does not mean that she has not earned money. It only means that her sales income, 1,66,830, for the first year was less than the estimated income, 1,80,000. However, the following analysis clearly shows that she will be able to get more from the next year. The average number of packets sold to regular customers per day came to 94 when the 12 months average was taken, and it came to 104 when the average from the third month onwards was taken. Other than this, she sold on average 2 to 3 packets a day on cash payment to casual customers. For getting the right idea of the profit percentage in the first year, we will have to take an account of expenditure also. 28 March 2002, Expenditure Analysis. Let us now examine whether her sales income was adequate enough to cover all her expenditures. According to Table 28.1, she estimated to spend 50% on the food of her sales money. Let us first analyze food cost. Food cost analysis. Lakshmi estimated total expenditure on raw foods at the end of each month. The various food cost records maintained by her helped her to determine food costs accurately and conveniently. After determining food costs for each month, Lakshmi checked whether it was within the estimated percentage, i.e., 50% of sales income. Lakshmi calculated food cost percentage for each month. It is calculated by dividing the food cost by sales income and multiplying it by 100. Food cost percentage is equal to food cost divided multiplied 100. Table 28.3 gives food cost, sales income and the percentage of food cost for the 1 year in Lakshmi's establishment. Table 28.3, food cost percentage for 1 year. It may be seen from the table that the food cost varied from 54% in the month of June to 42% in the month of December. This variation was acceptable. The high percentage of food costs in the month of June was due to the summer season when vegetables became expensive, and also due to the reduction in the sales caused by a higher number of persons remaining on leave. A reverse trend was observed in the month of December, when vegetables were cheap and the sales were also high. This type of variation in a week, in a month, or in a few months in a year cannot be avoided. But efforts should be made to maintain the cumulative or average cost within the prescribed percentage of food cost. As you know, in Lakshmi's establishment, the cumulative average for 1 year worked out to be 48.5%, well within the predetermined 50%. You are listening to this audiobook on Audio Learn IGNOU. Check your progress exercise 2. 1. Rama supplies bread pakoras and samosas to nearby primary school students and staff members during recess time with the permission of school authorities. She targets to sell 50 bread pakoras and 50 samosas in a day. The cost of one samosa is Rs. 1 and the cost of one bread pakora is Rs. 1.50. Her actual sales income in the first month came to Rs. 2,350. 8. Considering the fact that school opens only for 20 days in a month, calculate the expected sales income for a month and compare it with the actual. B. Rana decided to spend 50% of sales income on raw food. How much amount, in Rs, do you think she kept for spending on raw food? C. When she checked the records at the end of the month, she found that she spends Rs. 1,200 on foods. Calculate the food cost percentage and check whether it was within prescribed limits or not. Labor cost analysis. Lakshmi set aside a sum of Rs. 2,250 for labor in a month. I. C. 15% of projected sales income. As you recall reading in Unit 27, Lakshmi planned to pay a sum of Rs. 1,900 as wages. Rs. 900 for the cook and Rs. 500 each for 2 delivery boys. Other than wages, she kept aside Rs. 200 for casual labor. So she spent around Rs. 2,100 per month or Rs. 25,200 for a year as wages. In addition, she also spent Rs. 600 on uniforms and medicines. This total annual labor cost went up to Rs. 25,800. Let us see whether this was within the prescribed percentage or not. Labor cost. The percentage can be calculated by dividing the cost of labor with total sales income and multiplying it by 100 as given below. Look at the screen for table content. As you know, estimated expenditure on labor was 15% of the sales income. See table 28.1. Analysis of cost of expenditure on overheads and maintenance. Lakshmi decided to spend 5% of her sales income on maintenance and 5% on overheads. She found that in year she spent around Rs. 8,000 on repair and maintenance of equipment and kitchen premises and Rs. 8,600 on overheads. Expenditure on both these heads was within 5% of sales income. 28 March 2003, making a profit and loss statement. A profit and loss statement gives a complete picture of the income and expenditure in year. It is a measure to check whether the income is adequate enough to cover up all the expenditure and also to give a reasonable profit, or whether the expenditure is more than the income, this leading to a loss. This exercise gives an opportunity to find out the loss if any and to apply corrective measures if needed. Lakshmi listed down the cost of expenditure on various heads on one side and income on the other side. Lakshmi spent money on food, labor, overheads, gas, electricity, water, conveyance, etc. and maintenance. The money spent on all these heads was listed under the heading expenditure, and the total sales income both from regular customers and casual customers was listed under the heading income, and finally the total profit was calculated. The profit and loss statement prepared by Lakshmi for the first year of the operation of her establishment is given below. Profit and loss statement for the first year. Look at the screen for table content. From the profit and loss statement, it is evident that Lakshmi was able to achieve the profit margin she had forecasted. This enabled her to repay back the loan amount of Rs. 6,507 to the bank in the first year itself, and she earned good income also as profit for herself. Check your progress exercise 3. Sumo is running a small tea-cum snack shop in office premises. He is in this business for over a year now. He has kept an accurate record of expenditure and his sales income. After analysis of sales and expenditure, he found that he spent Rs. 60.045 on raw food. Gave hours 10,000 wages to his workers. In addition, he gave rupees 400 as a bonus and other benefits to the workers. The cost of maintenance and repair was only hours. 5,000 he spent hours. 6,000 on overheads like gas, electricity and conveyance etc. His sales income from regular customers was hours. 50,100 and from casual customers hours. 20,000 in addition, he also served tea at few office meetings and earned around hours. 10,000 prepared the profit and loss statement and check whether he has earned enough profit or not. 28.4 Are some changes necessary? As you know, a review of performance involves checking whether the actions or performance is according to the plans. You have seen the performance of Lakshmi's establishment in the first year of setting of her establishment. Lakshmi was able to generate enough profit to enable her to repay back loans and save money. Though her sales income was little less than the estimated, but the trend clearly showed that she will get enough sales income from next year. Her success here can be attributed to a great extent to the control measures adopted by her in her establishment. She had to exert these control measures for the fluctuation in full cost purchase, non-receipt of goods at proper times, improper storage, losses in storage, lesser sales. It means she kept a checklist or control measure for each stage of operation of her establishment. Recap 7 gives the list of control measures adopted by Lakshmi in her establishment. Recap 7 The control measures adopted by Lakshmi in the establishment. A list of control measures adopted by Lakshmi at each stage of operation is given below. 8. Menu planning. I. Planned the menu based on customer preferences. 2. Adopted the cycle menu 10 to accommodate seasonal vegetables and other commodities. And 3. Pre-costed the menu periodically to check whether the food cost was within the prescribed percentage. B. Purchasing. I. Prescribed specifications for each item. 2. Selected appropriate method of purchase. 3. Bought C. Point only available food to ensure low price and good quality. And 4. Made economical purchases in bulk to minimize the cost. C. Receiving. I. Checked the quantity and quality of food commodities purchased. And 2. Noted down the discrepancies between the items received and the invoice and brought it to the notice of the supplier. D. Storing measures. I. Kept the store locked. 2. Let only one person issue the items. 3. Issued items based on the need of the day and as per indent. 4. Used proper storage containers and racks. We. Kept the store clean and free from rodents and insects. 6. Properly entered the receipt and issue of the items in the stock register. And 7. Did physical verification of the stock periodically. P. Producing food. I. Planned cycle menu. 2. Planned work schedule. 3. Used standardized recipes. 4. Used appropriate equipment. We. Prevented wastage. 6. Pre-costed menu to ensure that it is within the percentage. 7. Adopted the right method of cooking, for example, vegetables like cabbage and brinjal with high water content were cooked at high temperature for a short time. 8. Kept preparation losses to the minimum by adequate supervision and use of right equipments. 9. Reduced leftover food items by accurate forecasting. Kismiley monitored the menu items after cooking and while packing. 11. Kept accurate records of packets prepared, sold to regular customers, casual customers and leftovers. It must be noted that these precautions helped Lakshmi to keep the food cost within the prescribed limit of 50% and to sell the food packets at Rs. 6.00 per packet, which was the price, determined by her taking into all other considerations, i.e. the cost and the purchasing capacity of the customer. Does this mean that Lakshmi does not need any changes or corrective measures for improvement? No, obviously not. Lakshmi has to exert control in all her future transactions in order to ensure that expenditure is within limits. She will have to bring in changes according to timely variations in the trend. 4. Example, if in a month she finds that percentage of food costs shows a substantial increase in a month, i.e., instead of 50%, it becomes 55%. What should she do? She will have to pause and check. The causes of such variations may be traced to either buying more material than needed or buying it at a higher price than estimated. Both these can be corrected either exerting control or check at each stage of operation. But sometimes, the price rise may not be within the control. In such cases, some adjustments will have to be made by substitution of food items which are within the price range as indicated in the precaution menu. If the food cost percentage increases even after all precautions and remedial measures, it can be concluded that for TI menu decided the food cost percentage is not sufficient. In such cases, you may have to increase the food cost percentage accordingly. If this increase is not within the feasible limits, one may have to increase the selling price so that the actual food cost remains within the prescribed 50% of the sales income. Similarly, for any other such discrepancy, one should pause and try to find reasons for it. One should then try to rectify it by proper control or checklist. Finally, one should remember that there is always a scope for improvement. After evaluating the overall performance, if one finds that the establishment has not achieved the objectives, one should try to find out the reasons for that. However, if NA is able to do so, as Lakshmi has been more or less able to do so, one should try to find out ways for improvement in terms of the quality of food served, customer satisfaction, income bonus and other facilities to labor better working conditions. One can at this stage take risk and try some new innovations like serving special dishes on festivals and other such occasion. 28.5 Learning from Lakshmi's experience. In this case study, you have learned how Lakshmi planned a small-scale food service establishment, put her plan in action and finally reviewed the performance. In this unit you have learned how Lakshmi checked her performance to see whether it was going according to the plans or not. She was able to see the situation by reviewing her sales income and comparing it with the expenditure. She was able to do so effectively as she had systematically documented all transactions. The information in the records gave her the background to assess the situation. Her assessment showed profit and optimum utilization of the resources as she had adopted certain measures for effective control. Lakshmi's establishment was not only a profit-oriented one but also had a reputation of supplying safe and wholesome food. Thank you. We will see you in the next video.